Alright, so what are we looking at here? I have here a few charts. If there are any charts that you would like to see, please let me know. I'll be happy to load them up. Not everybody trades just the E-mini. We have a lot of currency traders as well. And so the reason why I do these webinars, and I haven't done one in a while, but the reason why I do these webinars is to just show you how the Atlas line works, explain to you how the orders are processed, how they originate. I want to show you that this is a price action tool that does not have any parameters attached to it, which is very important. If you think about how a regular indicator works, it's always tied to some type of it's tied to some type of parameter, a 20-day moving average, or a 20 period, or 12 and 14, 28 momentum, and so there's no parameter. So if you look here on the back end of the Atlas line here, you can see that there is no parameters attached to it. The only thing you can do is turn on or turn off the orders that it provides. So right now all I'm showing is the trade double closes as true, and that's why you see the double closes orders that it provides. But besides that, if you think about it, anything attached with a parameter will always fail you into the future, because what you're basing the period or the parameter on is on history. And so with the Atlas line, you're not labeling this as tied to a parameter. Instead, what you're doing is looking at how price action revolves around the Atlas line. Everything you see here is based off of price action, and there's nothing as far as Fibonacci's, Bollinger Bands, Keltner channels, momentum, stochastic, MACD. There's nothing here, or moving averages of any type. There's nothing linked to how the Atlas line is programmed or calculated. So that's very important. And so what you have here in the back end, and if you've seen some of my videos, the tutorials that I do, and the how-to, I have over 150 videos on YouTube. You can see here that what's most important is this market open parameter. Okay, and you can actually add a second Atlas line to your chart for overnight trading. It doesn't have to be a pit session market. I have a lot of Australian clients like Heather, British and Germany traders that want to trade the currencies when the Life Exchange opens in London. So you can set this as well to trade an overnight, after hours, Globex, or a different session for wherever you may be in the world. So that's also another benefit here. If you have questions, that the Atlas line is not based off of any traditional indicator. So the calculation is based only on price. Alright? And so that's important to know. In case you missed anything that I said before, let me just say it again. It's based off of price. And therefore, if you look at how a moving average works, or any other type of indicator, stochastic, a MACD, Keltner channels, Bollinger Bands, they're all based on a period or parameter. And so what I was describing here is that the Atlas line is not based off of any type of, gets out of the way here, it's not based on any type of parameter. So there's nothing tied to it, meaning a 21 period or a 8 period or 14 period like stochastics and momentum. You have to assign a period to it or a parameter. There's nothing that links it. It's only based on the current market that you're looking at and the price that's being shown. And so really the only parameters we have is to turn on or turn off the signals. The market open here is utilized where in the world you live. And so with Heather being in Australia and Bob being in New Jersey, I think, right, Bob Cunha, and other traders being in England or Germany, we all have and are trading different markets, and our local time and our NinjaTrader and our computers are also set differently. So the only thing you have to adjust is where you live in the world as according to where the market opens that you're trading, what time the market opens that you're trading. The other thing I was saying is that the Atlas line is or can be traded overnight. So those international traders that want to trade the currencies or want to trade the markets in Asia, where the life exchange opens and starts moving these things, you can have a secondary Atlas line. So you have here an overnight. I'll just show you the euro overnight last night, and I'll expand this here. So this is overnight, the euro last night, or well, while I was asleep. This is the only one order that it provided, and then you have here a pullback trade and a bounce trade that I explained to you during a webinar. So you have multiple trades throughout the day. Here's another pullback over here, a pullback trade. It's called the Atlas line pullback. 2 consecutive red candles and then a green one. So you can trade this currencies overnight or after hours. When I'm asleep here in New York time zone, and you know, the international traders can trade here. And so now the pit session opens and you have another Atlas line being plotted. All right. Very good, Bob. Glad you can make it though. So you can see how the Atlas line is really dynamic to the market that you trade, as well as the different time zones or different periods of the day. And you can add as many Atlas line as you want, but I prefer to see it as a pit session and an overnight or after hours session. All right. So taking a look here at the euro, why did we have here a double bar long? Very simply, I like to explain the orders, and also with everyone who purchases the Atlas line, whether it be a lifetime or 6 month, I do a one-on-one webinar. Maybe there may be 1 or 2 other traders in there, but I do a webinar, a private webinar, where I explain to you how the orders are calculated, how it works, what you should be doing for the markets that you trade, all of the specifics. So it's a benefit. I'm just not throwing a tool at you and say good luck. I want to make sure that you're successful and utilizing it, whether it be with another method that you may be trading or in conjunction with some other type of thing that you may be doing. I want to make sure that what you're doing corresponds to how I created the Atlas line. All right. So now, why do I have here a double bar long on the euro? Very simply, and I have to make this as simple really as possible. 2 consecutive candles closing above or below the Atlas line is enough for me to initiate a direction into the market. And so you see here we have this red candle being the first one, this green candle being the second one. The closing price of this candle right here is giving me this order, and so this number will always correspond to the closing price of the second candle. So double bar long is telling you to go long at 1.4439. The reason being the second candle closed above, this is the closing price, and you have a signal. And the same thing is true with all the markets that you're looking at here. The Russell, the same thing, 822.4, 822.4, and therefore that is 822.4, closing price of this second candle. Also, if you look at the Australian dollar, same thing, second candle, tell you to go long. Crude oil, a completely different market than a currency and or an E-mini. I don't even have the E-mini here. Let me get an E-mini up here. Okay, a completely different market than the E-mini. We have here a E-mini long right there, and so the crude light also gave us a long order. And so you see how being dynamic as a tool that can accept any market on any time frame is important. It's not just utilized on one market in one time frame. Now, another question that I get a lot is what is the ATR here in the bottom? How do you utilize that? And so the way that I utilize the ATR, I don't have it here in my chart. Let me put it on here. The way that I utilize the ATR is a way that most traders do not think about. Oh, did I just erase that? Do not think about the current market conditions. Okay, and so there we go. Okay, and so they don't think about the current market conditions. And so what I use the ATR for, and I think that if you're not using it, everyone here in the room, if you take anything away from this presentation, is that we need to realize that if the market is fast or the market is slow, we can't trade the same way. And so I see that when we look at how we place a trade, we say I want 2 points profit, I want a 2-point stop, regardless of the condition of the market. And I don't think that way. I think that I want to take a profit target really based on what the market can do. And so if the market is more volatile, I want to take more profit. If the market is slow, you can't possibly hold a trade all day and expect to get 3 or 4 points out of it during a slow day. So I use the ATR really to tell me the current market conditions. And if you're not doing so, I want you to think about it and look at it. As a price action trader, I base everything I do off of price. I don't look at really any type of Fibonacci or Candle channels or anything like that to dictate what I do. I look at price. And so if you look at the ATR down here on the E-mini, for example, I have here the most recent current market conditions being about 2.5 points. It says here 2.69. I'll expand this so you can see this a little bit better. So 2.69 down here is the current market conditions. What that relates to, it says that if you take a trade, you can expect the price to move about 2.5 points, between 2.5 and 2 3/4. So you can expect price to move 2.5 points, and that should be a take on what your profit target should be. If that number was 1 point, then obviously you can't say I want 3 points or 2.5 points of profit. I want you to think about it and say, well, the market's slow, it's only ranged, each candle has an average of about a point. I can only expect to make a point off of this trade based on the most recent current market conditions. And so that's how I use the ATR to dictate my profit target as well as the stop. Okay? Yes, Joe, absolutely. Joe says, do we use the same targets and stops as the power price action course? Yes, Joe, absolutely. And that really goes really to any type of trading that you do. The same target and stops should be realized based on the current market conditions. You got it, Joe. Mark says here, why does the crude light begin at 9:50? No, the crude light actually opens earlier than 9:50. But the Atlas line begins plotting after the market opens and starts making its calculations, and therefore that's why you only see it mark after. Sometimes it's earlier, sometimes it's later, but you can on the crude light you can see it here starting at 9:50. You got it, Joe. No, are you referring to, Heather, the ATR, how it's calculated? No, the ATR, depending on the parameter that you choose. So right now I have a parameter of 4 as an example. And so what it's telling me, it's taking the last 4 bars, 1, 2, 3, 4. It's adding up the high and the low, dividing by 4, and it says the average true range of the last 4 bars averaged is telling me that 2.5 points is the average move of the last 4 bars. And so that to me is interpreted as the current market conditions on taking a trade should be 2.5 points of profit, or a little bit more on the stop. I think that using the ATR for just the stop, it's too tight. You have to be a little bit more liberal unless the market is slower. Now, I'm going to just back this up here a little bit. When this second candle appeared here, this is candle number 2, and this is candle number 1. The ATR was at 3 1/4, right? It says 3.41. I averaged down, so to me it indicates 3 1/4. So I know that if I take a trade at 13.1250, that I can expect to get 3 1/4 points out of the trade. So I'm basing my profit target on price, not on what I hope it's going to do or what I think it's going to do. Really, I want to base it off of price. So if you look at 13.1250 and you add 3 1/4 points to that, that's going to be 13.15, right? And so I can expect, I'm sorry, 13.15.50. I can expect to get at least 3 1/4 points out of this trade. So look what the ATR gave us. If this was your profit target, the ATR hit it, went through it by a little bit, and then backed off. The reason why I say this is because if you see, and if you want, let's say 5 points of profit, but yet the ATR is telling you, listen, the current market condition is telling you that it's not going to achieve that. Listen to what the current market condition is telling you. So getting in and getting out based on what the reasonable profit target should be makes much more sense by far than hoping that it's going to continue higher, that it's going to be a trending day. We don't know. The only thing I know is that the current market condition is telling me that profit target of X amount should be, and that's what you should always base a trade off of. Okay? Any questions, guys? Tim, the stop loss is no secret, Tim Reese. The stop loss that I look at, and let me just write here a couple of things here on the chart. And remember, the profit target that I'm looking at is dynamic to each market. So, for example, on the Russell, if you're looking at here at 822.40, which is the closing price, I look down, I see 2.5 points on the Russell. That's exactly what the market moved to. Okay? So using this as a feature of getting out of the market with a profit target is very important. Same thing with the euro. On the euro, it's a little bit different. And I'll get to stops in just a second, Tim, okay? You see here this number here? Let me see if I can expand that just a little bit. That it says here 0.00129, and I'll show you where it's at right now. 0.00129. That is what the ATR is showing me at the moment on the E-mini, right? So what is 0.00129? How do you correlate that into a profit target? It's very simple, and I get this question a lot. Move the decimal place over 4 spots, right? 1, 2, 3, 4. That would really account to 12.9. The ATR is formulated on the currencies as ticks, not points, like in the E-mini or the Russell or in the financial sector. So 12.9, if you move the decimal point over 4 places, equates to about 13 ticks, 12 to 13 ticks. So a trade taking right now would be based on a 12 or 13 tick profit target. And so you can see how it's dynamic. Now if you look at the euro at 10 o'clock when this came, and I try to put some results up. I have a results page that I put on trades on the Atlas line and the power price action as well that I see throughout the day. I place them there. 1.4439 right here is the closing price. At the time, I looked down, so now I'm going to move the chart over to there. And so if you can see that, I'll type it. It says here 0.00156. And so that equates to about 15 ticks. So at the time the Atlas line gave this order, at 10 o'clock this morning, 0.00156 is equal to 15 ticks, averaging down, right? 15 ticks, 15, 16 ticks. And so I can expect to get 16 ticks out of this euro trade. Nothing more, really nothing less. That's my target, and it's specific to the current market conditions to each market. So 15 ticks would be 39 plus 15. You're looking at 49.54. So it would be 1.4454 if my quick math in my head is correct. This would be my profit target. So I know this in advance, which is very important. And so that is where I want the market to go to. And look at where the market stopped based on my profit target. It hit it exactly. And so what did I use? I used the most recent market conditions to tell me how much profit I should take. What that means, if you really think about this, is most traders want 20 ticks when they trade currencies, only if the market can accommodate you. Yes, but if it can't, if this number was 10, if this number was 5 ticks, that's what you can expect. You can't expect more than what the current market conditions are. All right. Yes, Tair asks if it does work on any other time frame, 3 minute, 15 minute. Yes, 1 minute, tick charts, range charts. Yes, what it's doing is calculating price Tair. So that's how it works. So now there was a question here about stops. Tim Reese said, "What is your stop? How's your stops work?" So stops are very important. I use three different stops. I'll explain to you the first one based on the ATR. And Joe, you have the Power Price Action course. You know what the 3 stops are. But the stops for the Atlas line, if you base them only on the ATR, this is how I do it. I like to look at, for example, on the E-mini here. This is how I do it. If the ATR is 2 points or more, so 2 1/4, 2 1/2, I have a static 5-point stop. So regardless if the ATR is 3, I have a static 5-point stop. But when the market is slow, and the ATR shows me that, if the ATR is less than 2 points, then there's no need to have such a large stop. It's overkill. So all I do is double the ATR, and that's my profit target. So if the ATR is, say, 1.5 points, as an example, if the ATR is 1.5 points, there's no need to have a large stop. 3 points is max. Okay? Let's see if I can put this somewhere. Maybe like that. All right, Tim? To answer your question, that's how I calculate stops. Now, let me see if I can put this so it's out of the way. Maybe like this. Okay. So if we get into a trade and right away price goes against us, right? It goes right against us. It goes on the opposite side of the Atlas line. That's also a stop. Okay? So if you enter a trade and the market goes right away against you, you're out of the trade. So take a look here at the euro, for example. I have a profit target. It got hit twice, and now you're out of the trade. Now, if we have 2 consecutive closings below the Atlas line, I'm going to go long again. I'm sorry, I'm going to go short. I'm going to go short. 2 consecutive closings, we're going to get a short signal. If right now price closes right here, I think it reset itself because it hit the Atlas line. It should have reset itself. At the close of this candle, we'll get another long signal on the euro, but it's got to close above the Atlas line. Another way that you could look at this, if you want to drop this down to a 2-minute or 3-minute, you're going to get in a lot earlier. So I just changed this to a 3-minute chart on the euro, and you see it doesn't change how it's calculated. 2 consecutive candles, and you may even get in closer to the Atlas line if you drop it down to a smaller time frame. All right, because 2 consecutive closings, you got a signal. All right. Absolutely. Tim has another great question. It says here, do you use the ATR to determine if a trade is worth entering? Absolutely, Tim. The way that I want to look at how this is a bounce trade here, right here. The reason why I sometimes I stay out of the market if it's slow, so absolutely, or if it's too fast. What's my determination on the E-mini? I'll show you what that bounce trade looks like here. Just a second. Bounce to true. I'm going to click apply, and there's your bounce long right there. Okay. If the E-mini is 1 point or slower or lower on the ATR, I don't trade the E-mini. It's just too slow, Tim. You're going to get a lot of whipsaw, range, bound, and so I don't want to be there. Now, another aspect of well, before I finish that, I'm looking at a few things here. On the currencies, it's 5 ticks. So if it's 5 ticks or more, I am not going to go into, I'm not going to trade if it's 5 ticks or less. Okay, I'm not going to trade if it's 5 ticks or less. All right, that's how I look at it, guys. 5 ticks or less on the currencies. On the E-mini, it's 1 point. Now, if it's too volatile, let's say it's 5 points, I don't want to trade above 5 points. It's just too volatile, and it's a little bit too much for me to jump in with the size that I trade with. So 5.5 points ATR, I pull back a little bit. Where is my bar timer? Absolutely. I have to add the bar timer. Absolutely, Joe. Bar timer is right here. I use a bar timer to always know when the candle opens or closes. Absolutely, Joe. You got it. Lawrence says here, sometimes the order doesn't fill when the bar hits, right, your target and falls back. Should you fill manually if you don't get filled with a standing order? You know, typically you don't have that problem when the market is acting normally. You're going to find that, Lawrence, that when the market is slow or slower, you're going to have it hit and hit and hit, and it doesn't fill you. So what I recommend the traders that I work with do is, first, you have a set profit target. If it hits your profit target and you don't get filled, give it a second. If the following candle tries again a second time and doesn't fill you, that's when you manually get out. So I do give it, just so you know, twice to attempt to fill me. But after the second time, I want to be able to get out of that trade. So it's almost saying to you, I'm trying to get filled. Here's my second chance. I'm not getting it. Get out of the market. Now, another thing you can do, Lawrence, is use what's called a market if touched, which is an MIT order, which you're going to lose a tick on the trade, but it guarantees you a fill, which means as soon as it touches that number, it converts to a market order, and you're out of the trade. So that's another option, Lawrence. An MIT order, or a market if touched, or allowing it to try a second time to fill you, and then manually getting out. All right. This is also on the crude oil, a bounce trade here. It bounced off the Atlas line, just like it is here. And the reason why you see here multiple bounces on the euro is because this is a bounce candle and this is a bounce candle. So each time it bounces, it gives you an order. And I go over all of this with during the webinar that I do with everyone who purchases the Atlas line. I'm making sure that you're clear on how this works. The one thing that I was looking at here on both the Russell and the E-mini was what's called a pullback trade on the Atlas line. And those of you here in the room who have the Atlas line, if you remember what the pullback trade is all about, let me explain it to you again. A pullback trade is when you have two consecutive candles pulling back like we have here. So first we have to have a double bar order in place, and we have to be done with this trade. Once this trade is done, we may have an up day, a day that just keeps going long and long and long. And so I don't want to only take this one trade with the ATR early in the morning. If there's another opportunity, why not, since price is above the Atlas line, only concentrate on going long? And so we have here the measure of what a pullback is all about. A pullback is two consecutive candles pulling back. So we have here one, and then we have here two consecutive candles pulling back against the uptrend. We're still above the Atlas line. So now I'm going to look for, as soon as I see these two consecutive candles, I'm going to look for going long. And so in order to go long, I want to look at the first candle that reaffirms the trend up, which is this candle here. So as soon as this candle closes, just like that, I say to myself, well, we've had one, two candles pulling back. We're above the Atlas line. And now I want to take a long trade if price decides to continue the uptrend. And so we have one candle closing. I'm going to make this simple. Two red candles, one green. The closing price, I hit that long button. I'm long at 13.14. But there's a caveat that I like to say, or a filter that I use to dictate if this is going to be a good trade or a higher probability trade or not. And the filter that I use is that this entry price, since we are showing that this is an uptrend or a trend of any going higher, this entry must be higher than my previous order. And so you see here, this long at 13.1250 occurred here. This entry is now higher than my previous entry, and therefore we have a trend in place that is still good to take. And so I have a pullback, I have a long entry higher than my previous entry. That's a good trade to take. I only take 1 point on pullbacks. And so you see that it hit 13.15.15, and here we are. So this is an additional point. This could happen 2, 3, 4, 5 times in a day if we have a trend. So I always look at the Atlas line pullback after my initial order. Okay. Here we have it again. We have here at least two candles, 1, 2. The first candle that reaffirms green on the Russell is this candle right here. Can anyone here tell me if this is a good trade to take as far as the rules I've just described as a pullback? No. Okay, very good, Lawrence. Now, why would you say that, Lawrence? Lower than the first entry. That's right. So not knowing what's to come, this may start to be reversing direction and going down. That price, remember I'm a price action only type of trader, the price just proved to me that it is not ready to reaffirm this trend up, and so I can't take the trade. Very good. Excellent, guys. That's right. That's right. Very good, Heather. Excellent. So that's a way to filter out, because we can obviously see a reversal now occurring. If this green candle had closed higher, it's good to go. Very good. Very, very good, guys. Okay. This is actually even here on the crude light. It's exactly the same. Right there. All right, very good. Very good. All right, guys, questions? Take a look at yesterday on the E-mini yesterday. I'm going to post a blog post, and I'll put this video up on my blog as well. If you want to look at yesterday here, there's the short right there. Bright and early in the day, gave us a short. All I see is Atlas line pullbacks all day long. Pullback right here. Pullback right here. Lower, lower, pullback right here. Right? Pullback right here. Always entering lower. Here's another one. So I'm not picking and choosing days. I'm just showing you yesterday. I'm showing you today. Lawrence, I don't like to take it at the second candle. I like to see it with the first candle that reaffirms the trend, not the second. All right. All right, guys. I wanted to give you a demonstration of the Atlas line this morning on multiple markets, and I have a student starting now at 11 o'clock. I have a mentorship program that's very successful, and so I wanted to give everyone a quick tutorial on the Atlas line. If it's going to be beneficial to your trading, let me know. I'll be happy to give you guys, everyone here in the room can get a discount of purchasing the Atlas line, whether it be 6 months or a lifetime. The coupon code for a small discount is going to be 10 off Atlas, 10% off the Atlas line. Okay. I have to create the coupon, so I'll give it just a minute. All right, guys. If you have any more questions, I can always be reached at support@DayTradeToWin.com. I have a speaking engagement coming up in the New York area, and I'm available by phone or by email. You got it, Joe? 888-607-0008 as well. And I'll see everyone next time. I'll post this blog or this video on my blog and on YouTube. And have a great rest of the week. I'll speak to everyone soon.